Hey there, and welcome to this explainer. If you've ever felt like the financial world is just speaking a totally different language, one that's pretty much designed to confuse you, well, you are in the exact right place today. We're going to build your ultimate map and compass toolkit for your financial journey. Our whole goal right now is to just strip away all that unnecessary complexity and give you the straightforward, genuinely actionable knowledge you need to start navigating the markets.
Now, I want you to really think about this question for a second. What if your money could make its own money? Because honestly, that is the ultimate goal of investing, right? Today, we are going to completely demystify the stock market using plain English. No confusing jargon, absolutely no Wall Street gatekeeping. Just simple, relatable concepts so you can transform from being a hesitant observer into a really confident, informed beginner.
I always love starting with this thought because it just perfectly sets the tone. Compound interest is the eighth wonder of the world. He who understands it, earns it, and he who doesn't, pays it. Albert Einstein supposedly said that, and by the end of this, we're going to see exactly why it's so true. And listen, my promise to you today is zero cognitive overload. We are focusing purely on the absolute fundamentals and using easy, relatable analogies so these concepts actually stick.
Okay, let's dive into this. Here is our super simple 4-step roadmap for today. First, we'll cover what the market actually is. Second, we're decoding all that jargon. Third, we'll get into the magic of compounding. And finally, number 4, reading stock charts. All right, part 1, what is the stock market? Let's understand the terrain here. I want you to think of the stock market not as some big, abstract casino, but actually just a giant digital bazaar. It's a continuous loop between 3 main players. Basically, a company needs money to grow. Maybe they want to expand or launch new products, right? So they invite regular people, us, the investors, to put money into the business in exchange for a tiny slice of ownership. And the stock exchange, like the New York Stock Exchange, well, it just sits right in the middle as the regulated marketplace, making sure that whole exchange happens fairly and smoothly. Now, to really grasp how these shares actually move around, we have to split this market in half. When a company first sells its shares to the public to raise cash, that's called the primary market. It's kind of like a band selling concert tickets directly to you. But what if, a year later you want to sell your share? You don't take it back to the company. You go to the secondary market. And this is where literally 99% of all trading happens. It's exactly like fans reselling those concert tickets to other fans online. The band doesn't see a dime of that resale. The price is completely dictated by how many fans want to buy versus how many want to sell. It's just pure supply and demand. Moving right along to section 2, decoding the market jargon. Let's get these terms explained.
Let's translate some of this Wall Street terminology, starting with the most basic, a share. When you hear this word, just think of a fractional slice of a business. It's really that simple. If a company has issued 1,000 shares in total and you go out and buy 10 of them, well, congratulations, you officially own 1% of that entire company and all its assets. Next up is a dividend. Think of this as a nice little thank you bonus from the company. When a business makes a net profit, they can choose to take a chunk of that cash and distribute it directly to their shareholders. It's literally a cash reward for your ownership, putting money straight back into your pocket just for holding onto the stock. Pretty great, right? Then we have the IPO, which stands for Initial Public Offering. Remember our primary market example from a minute ago? This is that exact thing in action. It's like when your friend first sells you a share of their neighborhood lemonade stand so they can raise enough cash to buy more lemons and build a whole second stand. It's just that pivotal moment when a private company officially steps onto the public stage to raise capital. Okay, so you've definitely heard people throwing around animal names on the news. Here is what they actually mean. A bull market is a period of rising prices, specifically when the overall market goes up 20% or more. It's an incredibly exciting time driven by economic growth and just supreme investor optimism. On the flip side, a bear market is the exact opposite, prices falling by 20% or more, usually driven by fear and a slowing economy. But keep this in mind, while bear markets definitely sound scary, they are actually prime opportunities for long-term investors to buy pieces of really solid businesses at a massive discount. All right, section 3. The magic of compounding. This is the real engine for your money. To truly understand this engine, I want you to think of compounding like planting a tree. A tree is going to be vastly bigger and bear significantly more fruit when it's 50 years old compared to when it was just a 20-year-old sapling, right? With compounding, your money doesn't just grow in a straight linear line. It grows exponentially as time goes on. And this brilliantly illustrates the whole process in practice.
Step 1, your original money earns some interest. Step 2, you reinvest that new money right back into the pile. Step 3, now you're earning interest on your original money and you're earning interest on your interest. It starts off kind of slow, but as it rolls down the hill, that snowball gets bigger and faster and heavier as the money makes money and that money makes even more money.
If you want to see the real shock factor here, just consider this math. Imagine starting with just $5,000 and you decide to add $1,000 a month. At a historical average return of 8% a year, in 30 years, you won't just have the $365,000 you actually put in. No, thanks to compound interest, your balance will be over $1.5 million. Your profit alone is over $1.1 million. That's why time is absolutely, without a doubt, your greatest asset.
Section 4, How to Read Stock Charts. Let's look at the dashboard. To track your growing wealth, we always start with the absolute simplest dashboard view, the line chart. It literally just plots a single line connecting the closing prices of a stock over a specific time. Now, it doesn't give you all the gritty daily details, but it is fantastic for giving you a really quick, immediate assessment of the overall trend. You can instantly see if a stock is generally moving in an uptrend or a downtrend over time. Let's move on and see how this builds when you want the full story of the trading day. You level up to a candlestick or a bar chart. Instead of just a single dot at the close, these shapes show you 4 critical pieces of data for that period: where the price opened, the absolute high it reached during the day, the absolute low it dropped to, and finally, where it closed. Generally, green means it closed higher than it opened, and red means it closed lower. It just paints a much richer picture. So, the crucial point is knowing how to actually spot the boundaries on these charts. Think of a stock like a rubber ball bouncing around inside a room. Support is the floor. It's a price level where a falling stock tends to stop and bounce back up because buyers suddenly rush in thinking, hey, this is a great deal. Resistance, on the other hand, is the ceiling. It's a price level where a rising stock pauses and drops back down because selling pressure suddenly blocks the upward move. Recognizing these floors and ceilings is how you spot when a trend might be reversing. Now, to filter out all the chaotic daily noise of those charts, we use something called a moving average. It takes the average price of a security over a specific chunk of time, like say 50 or 200 days, and draws a nice, smooth line right through the chart. It completely smooths out that erratic daily jumping around, acting like a really clear map that reveals the true underlying direction of the trend. It's super helpful for spotting smarter entry and exit points.
And just like that, you now have the map and the compass. You understand the whole ecosystem of the market. You speak the language. You know the absolute necessity of giving your money the time it needs to snowball and compound, and you can actually read the dashboard to see where prices have been. So I'll leave you with this final provocative thought. The market is open. How will you put your money to work today? Take control of your financial future, start small, and just let that snowball start rolling. Thank you so much for joining me on this explainer, and hey, happy investing.